And the major mining companies have to be convinced of that. I mean, they've been, made mistakes over and over again where they put a low-grade project into production and the metal price drops. I think probably the biggest supply deficit I see is coming in the copper market. We can go into that in more detail. Nickel is another one that I think we're going to be short of in the future, and gold and silver as well, deposits. I think those are probably the ones that are most likely to happen, and the reasons behind that in all cases are that we haven't been putting enough money over the long term into exploration. It's becoming harder and harder to find new deposits. I mean, most of the deposits that are sticking out of the ground have been found. Now we're looking undercover, blind spots using geophysics and more esoteric methods, if you will. So that makes it harder and more expensive.
But it makes you wonder, at some point, are we going to run out of some of these commodities? Or there's enough as you just put it, there's 100 low-grade junk deposits out there for every high grade that we're working right now. So there's plenty of copper and nickel and cobalt and silver out there. It's just how low on the junk table are we willing to go mine these commodities at some point, correct?
Yeah, and what that says is that we're going to need much higher prices to make those junk projects work.
Yeah,
and it's got to be, and the major mining companies have to be convinced of that. I mean, they've been, made mistakes over and over again where they put a low-grade project into production and the metal price drops and they lose money and go bust. So, as a major mining company, you're looking at a discovery and drilling out a resource, but you've got to kind of plan on what's the copper or gold price going to be 10 years down the road when it actually gets into production.
Yeah.
And that's a big commitment.
So Brent, I wanted to ask a couple of examples, because you look at all of these companies very closely. Some of them you've just for full disclosure, some of them you probably worked for in the past, some of them probably not. But Vizsla Silver, that's a silver company that I know you're on top of. What is it you like about this one, and why do you think this one has a shot long term?
Well, this is okay. So they're searching for high grade silver gold veins in the Sierra Madres, right? What they've hit so far tells me they've got a good width in terms of the vein mineralization, which is key. The wider the vein, the lower the cost to mine it. They're getting good grades out of it. And additionally, they've got, 20 kilometers of 20 kilometers of ground that have a number of veins with high grade surface sampling and a few drill holes that tell me this is a district we're seeing a district developed. And these are the sorts of projects that major mining companies want to own. So I think it's got a shot at being, producing a decent sized resource and something that a major will buy at some point in the future.
Yeah. Another one that I know that you're on top of is Silvercrest Metals. Now this one, it's already built and they're actually scaling up production. It's in Mexico. And this is Chris Ritchie is the president of this company. There's a picture of their first bar that they actually poured.
Oh, nice.
And this is one of those high-grade, low-cost mines. But describe what they did here and why it worked, and why people should pay attention to something like this.
Okay, well, this is sort of what Vizsla is hoping to get to. And it started off with a number of high-grade surface samples. The drilling confirmed that they had, very high-grade, good continuity in the mineralization. The mining was fairly simple. The metallurgy was well known, and they built it on time, on budget. This has been a fantastic discovery to production story. This is what you want to find.
Yeah, and it's my understanding their cost per ounce for silver is something around $10 an ounce. So even in an environment like this, but this company makes money even in a low price environment, right? They're cash flow positive. or they will be once they get completely scaled up to their full production. But this company's already making money even at low prices. So if silver takes off to 25 or even 30 in Ivan's wildest dreams, this is all of a sudden just raking in the money. And this is why you want to pay attention to something like this. Economically viable, right?
I think that's exactly right.
Yeah.
This is a high margin deposit. Even with low gold prices or silver prices, they're not going to go broke.
Yeah. Another one is El Oro in Bolivia. Now this is silver, tin, zinc, a lot of them, but it's huge. Why do you like El Oro? Why are you paying attention on this one?
I like the size potential of this. It's not, it's a polymetallic deposit. They've got a good deal going down there. Smart guy running it. Quentin's involved in this as well, Quentin Henning, who I've got a lot of respect for. And this just has the size potential to be of interest, again, to a major mining company. I mean, Pan American is working in, where is Bolivia, of course. So I think it's a real shot at turning into an economic polymetallic deposit. And it seems like a good location. I think Bolivia is coming around right now.
Now, another one that you mentioned to me that you wanted to talk about is Headwater Gold. Now, I'm not familiar with this one, but tell us what it is about Headwater Gold that you think this one stands out from the pack.
All right. Well, I met with them in New Orleans. I was impressed. I went and looked at their projects in Nevada, some of the projects in Nevada. I think it was just last week. And I was extremely impressed. Number one, the management. They're shareholder focused, tight structure, currently about a 16 million Canadian market cap. They structured one of the best joint ventures I've seen with Newcrest Mining, whereas Newcrest committed to spending US $8.5 million on 4 of their projects over the next couple of years. The projects I saw are conceptual, grassroots. They're not real re-drilling old holes. And then they've got a few 100% holes. One in particular called Katy in Idaho looks really, it's on the Idaho-Oregon border. That has a lot of potential. And I just see this as the sort of company that when the market turns or when people start recognizing what they're doing, this is worth a lot more than 16 million Canadian. And I bought the stock, I own some, and they brought me on as a technical advisor as well.
Yeah. So that's 4 good names for the audience. And I appreciate that because there's so many names out there and so many sort of flimsy companies that people probably should just completely ignore. So we appreciate it when a guy with your level of expertise can come on and give a little bit of opinion and a little bit of background on some different ones that might be worth a risk, worth taking a shot at. And would you think it's fair to say, don't bet everything on just one, nibble away at these with a little bit, because these are high risk plays, right?
Yeah.
What's your strategy on investing in these things?
Right. Well, I'm probably not the ideal person to ask. I focus on what I know. So my portfolio is sort of a dumbbell shape. It's high risk junior mining companies and basically T-bills.
Yeah.
A little bit of energy in between.
Yeah.
But yeah, these are high risk. It's exploration, high risk, high reward. I would, as always, don't bet more than you can afford to lose, basically.
Right.